Hi, Beth Rebenstorf with the Reby Homes team, and it is time for the Phoenix metro area real estate market update for March 2021. Well, first, let's take a look at the national average for the 30-year fixed interest rate, which it came in at just over 3%. Freddie Mac reporting that since reaching a low point in January, mortgage rates have risen by more than 30 basis points, and the impact on purchase demand has been noticeable. Expectations are that the interest rates are going to begin to rise. Here's a snapshot for the 30-year fixed rate going all the way back to the beginning of last year. January and February of last year, two of the best months in residential real estate in over 10 years. We've been ahead of that this January and February, so a lot of demand, a lot of activity in the market, and now we're starting to see those rates creep up. A question we hear frequently is about loans that are in forbearance and how that might affect inventory and prices. This data is as of February 14th, 2021, and we see almost 50% that took forbearance. Well, they didn't need it. They made their monthly payments, or they made them at the end, or they paid off their loan in its entirety. A significant portion, 33%, are in some kind of loan modification or deferral where the missed payments are tacked on to the back of the loan. So 84% of those that took forbearance, they got out of it. What's important about that is the projection that all these people who took forbearance would turn into foreclosures. While there are still just over 15% that are still in trouble, that they don't have a loss mitigation plan, or they're in some form of distress sale, a deed in lieu or a short sale. Another 84% have moved or are moving through forbearance, either having no issue at all or striking some kind of deferral modification with their bank. And here's a look at the percentage of overall forbearances. It plateaued over the last couple of months, where we see a 5.22% of all mortgages as of February in active forbearance. The DS News reported about 325,000 people will exit the forbearance program over the next 6 to 9 months without a plan in place. Some, but probably not all, of those loans will likely default. So that's 325,000, according to the DS News, coming off of forbearance in the next 6 to 9 months. With appreciation increasing as it is, it's much more likely that they'll be able to sell and move through the crisis that they're in. To put that 325,000 loans or homes into perspective, here's a picture. If all of those 325,000 potential distressed sales came to market, that wouldn't even get us to where we were this time last year, or any time back to 2016. This is a look at the year-over-year change in listings over the last year. The green bar is new listings, and the orange turning to red is the total listings or inventory. As quickly as they come to market, all of the listings are being purchased, resulting in desperately low inventory levels across the country. As a seller, when is the best time to sell something, anything? Well, when there's fewer of that item on the market than any other time. And that's usually in real estate around January or February. Last January and February was definitely a sweet spot, but today we sit at an even sweeter spot with an average of about 1.9 months of active inventory nationally. And that brings us right to home price appreciation. The final numbers are in from last year for 2020. FHFA is saying 10.8% appreciation is the average nationally. CoreLogic is saying 9.2, Case-Shiller 10.4. So let's call that a 10% appreciation across the country. Very, very healthy and above normal appreciation. Well, how does current appreciation compare in the lead up, the 4 years leading up to 2006, which was some of the height of the housing market, and our current annual appreciation? Well, it was 10.3% back then, 2002 to 2005, where today it averages just over 6%. If we go back and look at the FHFA maps, the fourth quarter of 2020, the country appreciated overall at 10.8%. Going back to the fourth quarter of 2005, housing appreciation across the country was about 13%. The West saw 18% appreciation, the South 17.8%, and in the middle of the country 6 or 7%. It's an interesting look when we compare how the market was performing in 2005 and how it's performing today. And now let's take a look at our local Phoenix market area numbers. Well, there is no question that the critical factor driving Phoenix real estate is supply and demand, or the lack of supply. If we look at 2018, there were over 18,000 units for a buyer to choose from, dropped to 16,000 in 2019, dropped to 10,000 in 2020, and 2021 is at a historic low of a total of 4,274 available properties to purchase. And that brings us to the appreciation that the Phoenix area is experiencing in homes right now. When we compare price per square foot from March 2020 to March 2021, in the under $300,000 price range, it went from $150.59 up to $180 a square foot for a 20% increase. In the $300,000 to $600,000 range, the increase was 14% from $178.59 to $203.77, and the 600 to 1 million saw a 12% increase year over year, 226.48 to 253.88, and homes over $1 million had an increase of 8% on average, from $365.22 to $394 a square foot. The high demand also shows up when we look at monthly sales. For properties under 300,000, last year, February 2021, 341 versus 552 closed in that month. In the $300,000 to $600,000 range, it went from 228 in February 2020 to 689 in February 2021. And in the 600 to a million went from 49 to 154, and look at the over a million, from 21 units up to 91 units just that month. That's our March 2021 Phoenix area market update. If you haven't checked out our YouTube channel, you might want to go take a look. It is packed with insightful information, especially these days, about how to win in multiple offer situations, what appraisers do consider and don't consider, and a host of real estate related information. I'm Beth Riebenstorf with the Reedy Homes team, where we bring you real estate beyond expectations.